this particular class. We've had a couple of workshops. We've had some one on legal, we had one on growth marketing, we had one on consumer behavior, we had one on business model, um, and a couple more that we had in the past. We also had one on financial modeling, basically how to go about valuations, how valuations are done for those who are looking to raise VC funds. So it's been a really, really packed few months after our last session, after our last session of SDC Startup School. So we're about to have another session of SDC Startup School in September, right? And it's a 5 day, it's a 5 day class, really packed, but really focused on laying the foundation, right? We've got a lot of questions around, what exactly is it? How do I go about it? I have an idea. What are the first set of steps I need to take? And so on. And that's really what the school is really focused on. It's a global audience and it's packed with lots of content. There will also be case studies. There will also be case studies. We're going to have some founders even show up and have like a Q&A session, um, so that you guys can ask questions, right, about building a startup both in Nigeria and also outside the country. And it's just 5 days, 5 days, six major topics. There'll be tests because it's a school, so definitely you should be on the lookout for that. Where it's packed with lectures and utmost attention is required. So if you want to register, just go to the link cynthiaichisom.com /register to participate. Um, so yeah, welcome everyone. Just put in the chat box where I see Victor. Victor, thank you for putting that in the chat box. Every other person, please put in the chat box. All right, your name, where you're joining from, and if you have a startup, great. Put up the name of your startup and the link to the session. So we have just 3 more minutes to welcome everybody in, and we would we would get started. Okay, so welcome everyone again. Welcome. I see Paul from Oyo State. Welcome. Every other person, put it in the chat box. Alright, don't feel shy. This is a very good place to connect and get to know each other. You see, the thing about building a startup, you always want to do it in the community. You always want to learn from every other person in the room. You want to connect. You can't really do this on your own, right? And that's why we're here, because we know that these things need a lot of support. So we bring in exceptional people in their field to come teach you on different topics, across the entire scheme of what it means to build a startup. So this is one of many workshops that we have at least once or twice a month. We've had one on growth marketing, we've had one on legal fundamentals, we've had one on financial modeling, basically how to go about dilution, valuation, and things like that. We've had one on consumer behavior, business modeling, basically friends of mine in the ecosystem coming to take out their time, take out a portion of their time to teach you, and all of this is for free. So one of the things I really want you to do is to put get a pen, get a paper, your pen and your notepad, if it's in your laptop, fine, document, but just make sure that you're paying attention. Don't just have it playing in one corner of your room or something, and you're unable to give great attention to it. So slides will be shared, so you want to be following the slides, and especially with this topic of accounting, um you really want to make sure that you are paying full attention. um so for every other person, please put in your name, where you're calling from. I see Treasure joining from Abuja. Don't we have a startup? I'm trying to position myself too. Great, great. And I recommend that you join the startup school, because then you can be fully equipped to actually know how to go about that, so that you don't make the mistakes of the past. That's one of the things you don't want to do. You don't want to make mistakes of the past, which is why part of the part of the things that we do at the start of school is to look at some case studies, right? Look at some case studies, look at some of the things that have been done in the past, some of the stories of founders. We're going to have some founders come in and share their experiences. So learn from those are just who are just be ahead of you, right? Who are just ahead of you. Okay, so we can start. So if you haven't introduced yourself, please introduce yourself. Okay, please introduce yourself.
All right. Good evening.
No, no, not
Hello.
not
Good
that,
evening.
not verbally. Just in the chat box. Arrow in the chat box. Okay.
Oh, okay. Okay. All right. Sorry
Yeah.
about that. Sorry.
No worries. Okay. So I believe we can go ahead. We would start right now. So it's with great pleasure. It is with great pleasure that I actually bring to the stage um, an exceptional entrepreneur, right? And this is someone I know who is very passionate about entrepreneurship, about entrepreneurs, about inclusive economic development, right? He has an MBA. He studied accounting. He has an MBA. Still on accounting, focusing on entrepreneurship. How accounting can be applied to founders, because you know founders run away from accounting because they feel like it's too difficult, but it's so important, right? From your business model to your revenue model to actually how you maintain expenses. You want to make sure that you know how to do the numbers, right? Because at the end of the day, you're building a business, not an NGO. So he holds an MBA from Babson College, USA, and over the past 12 years, he has provided a range of support services to entrepreneurs, including related to accounting, um, coaching, advisory, training, facilitating funding for some of the founders as well. And he has been able to launch a number of ventures from Venture Hub Africa, which I'm very well associated with, Owo Consult, Nation, and he's happily married with two kids, right? And he's also an author. So it's with great pleasure that I bring David, a good friend of mine, to the stage and to teach. Remember, like I said, everyone, pay attention, and there'll be a part for you to ask questions at the end of the session. All right, David, over to you.
All right, thanks a lot, Cynthia. Can you hear me?
Yes, yes, I can.
Okay, I'll just try to share my screen. And okay, can you guys see my screen?
Yes, it is good.
Okay, awesome. So thank you, Cynthia, and as well as the team. Thank you everyone for signing up. What I found out is, in as much as we're trying to be helpful, people like Cynthia, the kind of work they do, also us at Venture of Africa. Um, if entrepreneurs don't show up, if they don't think that what you're doing is important, then there's nothing you can do. So for you to show up, then it's because you really value this conversation. And so just want to say thank you for showing up. So whenever I go through this topic, even though I just reluctantly put together a slide, I always prefer Q&A because everybody have their different situations, and I just enjoy, the interaction and the questions and answers. So I would try. I hope I'm able to finish my presentation in a shorter time than it's allocated to me, so that we can do more questions and answers. Um, so quick backstory. Thank you again, Cynthia, for the introduction. I started out, in secondary school science class. I don't know how it is now, science class, commercial class, and I think there was art class. So I did, physics, chemistry, biology, and all of that. I was top 10, top 5 sometimes in when I was in secondary school. So I loved the rigor of science, right? But my dad was an accountant, so I was just really inspired by in accounting, banking. So I said, okay, when I get to the university, I'm going to take accounting. I'm going to, transition to accounting. And by the way, still in secondary school, I was best in, maths and further maths alongside some other people. But I was prize winning and so on. And then I chose accounting. I got to the university. And prior to that time, I'd never taken an accounting course. It was just, okay, we'll figure it out when we get to university. And I was really, the first thing that I realized was this thing was so boring. Like this, I was really disappointed. I was saying, oh, so this is what I'm going to be spending the next 4 years studying. It was really annoying, and many times, in fact, at the point I considered dropping out. But the fear of my Niger parents, now I just couldn't try it. And then I just the only way I could cope really was I sleep off in class. I just doze off, to the point that in my final year, remember this was a guy prize winning and all of that. Final year in school, when graduation, they do all this graduation party and just do like awards. I was nominated, for an award for the top three guys that sleep the most in class. And I wish they gave me the award so I could hang it somewhere and say, hey, look at what happened. But I couldn't even tell anyone, tell my parents, because it's just this guy is very serious. We know he can't do that. But long story short is, to start with, I understand if already from just seeing this tattoo you're feeling sleepy. I understand. It's a topic that often is boring. Sometimes it's difficult to understand. And but the very fortunate thing, let me put it that way, is that we can't run away from it. So we just have to learn it, right? So I'm gonna try my best to help out in that process. I'm just gonna skip about this. I love entrepreneurship, and I'm at a point in my life where I'm really thinking about how do we leverage entrepreneurship to solve the problems in our community. What I notice is that we do a lot of entrepreneurship support. Entrepreneurs, then succeed. And then what happens when they succeed? They make more money, they're fine. Then they go, their families are taken care of and all of that. And then they go replicate the success. They make more money and they make more money. They keep doing that. But I don't see as much, when you succeed, when people succeed at that level, I don't see as much people who are really concerned about the community, about the how do we really create impact? So that's by the way. So I already talked about this. It feels like, hey, what's going on? This thing's really difficult to understand. Hopefully we're able to untangle some of the topics today. So I started purposely with that topic, accounting and financial management, because many times when we hear accounting, it's this boring stuff. We want to, recording, bookkeeping, where's your financial report? But really, accounting is just a subset of a bigger concept called financial management. And I'm sure, the word finance is interesting to everyone, whether it's about raising money, whether it's about managing your fund. Yeah, every one of us, I think that word is better, financial management. But one thing, like I said earlier, is one thing that makes it really critical is that we just can't run away from it. This is a story, for example, of a really successful company in China that essentially went, they went bankrupt as a result of their financial woes. The interesting thing is that all the decisions we make, the finance is a place where it's like a report card. Whatever decisions you make reflect on your finances. And so we don't know what qualifications these guys have. We don't know their passion. We don't know their vision. All we know is and again, you probably don't know them personally, but what we can tell is that they made series of decisions that negatively impacted the company, such that the company had to go down due to that. And you can see the graph there. Look at how they went up. The details of it is not even necessary. Yes, you can dig into that, but what matters is whether it's in real estate, whether it's in technology, whether it's in agriculture, it's the same. Financial management is financial management, even whether it's a country. You can check out the story of Sri Lanka. So many, even we can check out the story of Nigeria. Financial mismanagement always has the same impact. It's red and it goes down. That's what you need to know here. And what I see, the reason why I like that is we have a wave of startup, and everybody's talking startup language, and it feels as though startups are invisible. Guess what? Startups are making some really critical fundamental mistakes that oftentimes doesn't make sense, and we're beginning to see the impact. We're beginning to see impact. You hear stories. Just last week or 2 weeks ago, within the past 2 weeks, I've probably read about two companies that that they're having to shut down. Startups. They've raised quite a lot of money, and then the rest is history. So please let me know if you have any questions. Just you can drop your questions in the chat, but I'll just go on quickly. So I want to really get to the questions and answers. Okay, so what exactly is financial management? Personally, over the years, my observation, people say entrepreneurship is about opportunity, resources, and execution. But my observation is, I'm adding like strategy, meaning that, hey, as an entrepreneur, we're able to spot an opportunity. Okay, where is a problem I can solve? Where's a gap in the market that I can bring a product to address? Who, maybe there are people who have a particular profile that need something, and okay, I can just render that service. I remember way back 2008, 2009, where I started my very first venture. The opportunity for me is, I was in Borno State, prior to Boko Haram. I was in Borno State. I realized, okay, in this place they have, during the harvest, there's a lot of rice. As far back as that time, I think I bought bag of rice was like 6,000. Can anyone know? Does anybody know how much bag of rice is now? Can you please drop it in the chat so we know like how far, how fast is that time? Just write in the chat. I don't know how much, but I know definitely it's not 6,000. So 30,000, 50,000. Okay, I think 50K looks like the correct answer. But yeah, I bought a bag of I bought about 4 or 5, and then I kept it for stored it somewhere, and then I resold it for 10,000. Very simple business. So opportunity and then resources, top among which is funding. There's funding, there's people, there's knowledge, there's all sorts of resources. And then there's strategy. Okay, how do we, so what is the end goal, and how do we achieve that end goal? And then of course execution. Now, funding is one of the biggest, most important, critical resources that an entrepreneur needs. And so you can see already why you need to focus your attention on it. So all the coding, all the tech, all these new things, AI, all these things we're talking about, no matter how sophisticated, how next level your business is, if you miss it in this area of financial management, you're done for. So it's just a reality. But what exactly does financial management entail? Remember, I said earlier that accounting is just a subset. And so financial management, as we said, how do you utilize financial resources? These are some of the things it covers. One is, determining how much funding do you need, estimating the capital required. Many of us are used to this, hey, I want to raise $250,000. I want to raise, we're very good with, not so good in reality, because based on what I've seen, we just come up with figures. I want to raise my pre-seed $100,000 at this, at that. So what's the basis of that, right? So, but these are all financial management activities. Determine the capital structure, how much of loans, how much of equity, what is the shareholding, and what is the implication of, either taking more debt or taking more equity. What is it? What are the implications? Evaluate and select sources of funds. So you would note that these are things you're already used to as an entrepreneur. Okay, do I go for grants? Do I go for angel investment? Do I go for what options do I go for? Right. And so then once you get the money, and this is where we begin to have issues. And I was telling some people some weeks ago that I noticed there is a lot of content and noise and awareness on how to raise funding. But once you cross over to, after evaluate and select sources of funds, allocate and control funds, you begin to enter the gray area where people begin to make mistakes, because now the money is in, then okay, let's begin to spend anyhow, or let's allocate it in whichever way, or in this way or that way, without without paying attention to the strategy, without paying attention to the principles and concepts of finance. Now, finance happens to be one asset that you are. So your business, for example, is you're creating a software for schools to be able to manage payments and collections and all of that, and that is the business of, let's call the name of your startup, school pal, school pal. That is the name of your startup. Your business is providing a technology solution. But guess what? Whether you like it or not, as with any other resource, but mostly finance, your business is to grow the resources you have. So finance is an asset that you take on. Once you start a business, you take on this responsibility to not just use those resources for the purpose, which is to create this solution to help schools, but you have a responsibility to effectively manage and grow that money. Because if someone gives you 1,000 naira today, 100,000 naira today, 10 million, they don't expect that they come 10 years time, even if it's your money and that 10,000 is the same. It has to grow, right? So allocating and controlling funds, distributing profit or surplus, monitoring financial activities. You could see that this is where the accounting that we know comes into, but you see that they are all integrated. I was reviewing someone's pitch deck a few days ago, and the person had estimated the amount of capital they needed. Then I asked, okay, so why do you need this money and what do you need this for? You still have you have to, so it's about estimating required capital, but you have to go to monitoring financial activities, go to your prior performance. How much have we spent to date? What's going on? How do we spend? How does money come in? Right. And then plan, what do we want to do over the next couple of years, couple of months, then estimate what that funding will be. So you always have to keep going back and forth between all of these activities. So I'll just go on quickly. So what is the importance of this financial management? And it's a skill. You can't learn financial management in this webinar. This is just giving you a snippet. It's a skill that it takes time. It takes repetition, it takes learning, it takes experiences, and so on. These are just a few examples. To stay alive, yes, we already know that. Majority, and we have those data that says there's a large percentage of startups that fail because they run out of cash flow. I think that's something that we all know of. Lack of cash is almost automatically death for any business, right? And so financial management also helps you to access funding more easily, also helps you to grow your business, and also keeps you compliant, right? So the importance is cannot be overstated. We need to pay attention, right? This, like I said, this is a teaser because these are entire courses, but I'm just going to rush through because the questions is where I really want to spend more time on. So who is responsible for this? Is it your accountant? Is it the investor? Is it the manager? It's you, the entrepreneur. You are the chief financial officer, even though yes, at a point in a business, people hire a CFO, but the entrepreneur is the chief financial management officer, and you cannot delegate it. Financial management is not asking someone to come and prepare your accounts and say, oh, thankfully this person is preparing my accounts. No, that's just a subset. Accounting is only a subset. So you, the entrepreneur, are absolutely responsible. You could see all over the world, even we see cases like WeWork. Once your financial management is poor, the investors the CEO gets sacked. they replace the CEO if you're not delivering financial results. So it's the core responsibility of the leader, right? So now let's get into accounting. And the way, accounting is, it's as simple. The simple thing, the simple way to look at accounting is just data, financial data. How do you capture this data? And many of us startups, tech entrepreneurs, I'm using startup a lot because I'm assuming that's the audience here. But we work with both startup and small businesses, and all this information applies to both, to any kind of entrepreneur, even non-profits. We've worked with a number of non-profits, and it's the same need. So I'm just gonna keep using the word data. So data entrepreneurs know that we are very we understand data a lot. Yes, we need data to know this, to know that. But guess what? Imagine that whenever you think about accounting, think about data, financial data. To the same way you put a lot of data, the same way Google needs our data to sell to advertisers. Imagine what data is right now. AI is built on data. Just imagine the power of data. And then now we're talking about accounting. That is your financial data. And so the way that I look at it is there are 4 areas. This is from my own experience, right? There's the raw data, and that's transaction records, bank statements, invoices, bills, anything that has, that captures the transaction, that's the evidence of a transaction. It's data. So that's definitely bank transfer, anything that can, you set up a payment platform for your product. You probably have an account with Flutterwave. Transactions are coming in. All of that is data. Then we move on to the next stage, which is information. Information just simply organizes this data in a way that is easy, that is where you can begin to spot trends, where you can begin to measure, where you can begin to really look at what exactly does this what exactly does this data tell? What story does this data tell? And so when it comes to accounting, the 3 primary collections of information is the profit and loss account, balance sheet, and cash flow. Can anyone, send me post in the chat, has anyone heard about these 3 documents? Profit and loss, balance sheet, and cash flow. Has anyone heard about it before? Yes, almost all of us, I believe. And then that doesn't stop there. What we found, because Owo Consult, for example, we're in the business of supporting entrepreneurs to prepare their financial reports and advising them based on those numbers. So what we find is some entrepreneurs will just be like, hey, I'm looking for someone to prepare my account. I'm trying to apply for an investment, or I'm applying for a grant or do my taxes or something. So they just get someone prepare the report and that's it. So what's happening is they are stopping at this information level. We need to progress to the next level, which is analysis and insight, which is where you actually take that information and begin to, break it down. What exactly does it mean? What insight can we get from this information? What is it telling you? What is it saying about the past? What is it saying about the present? What is it even saying almost about the future, right? So that's a place that a lot of entrepreneurs don't look at. And then finally is, what do you do with that insight? Planning and decision making. I had a conversation with someone at some point who was selling, I think, chocolate popcorn or something like that. And he was looking for investment from a friend of mine. And the friend of mine said, hey, go talk to David. By the time we sat down and analyzed the cost of the product, he was selling at a loss. But if it's okay if that's your decision, like a lot of tech, entrepreneurs or tech products, you might start out with, making negative, right? Losses, but you want to get into profit. But this is even different when, number one, you are not even aware. Number two, this is even you're already violating violating your unit economics. If the cost of producing something, the cost of selling, the amount you are selling something is lower than the cost of producing it, how do you want to survive? But the person wasn't aware until we had to analyze the numbers. Revenue model, how do you make money? Yeah, you've said that the government is going to pay you, or small businesses are going to pay you, or this is, but okay, what's the basis for that, for that for that decision, right? So profitability, how profitable are you? Are you, when are you going to be profitable? When are you going to be, when are you going to break even? Finances. So all of these areas, taxes, budgeting, they all come from all this information. What usually happens is these areas are the really nice areas, profitability, financing, growth. We want to start here. We want to start with, this, without looking at these three. Of course, when you're just starting out, it's okay where, you probably may not have some financial data, right? You probably may not have information. You probably don't have insight. So yeah, you can start out with trying to make some financial decisions, but, with the existing information you have. But you want to make sure as you begin to grow, you build a system that helps you to move this way. You start with your data, capture your data, it gets into information, analysis and insight, and then planning and decision making. I'm going to, let me just move on to the next slide. I wanted to do what did the numbers say? Just compare numbers from two companies, but let me move on to the next slide before, and then I'll come back to that. Okay, so what do you do? Let's say you're just starting out, or whatever you are in the stage of your business. Let's see, what are you supposed to be doing? What are you supposed to be doing? Data. The quickest, so startups, entrepreneurs were so busy, running the business, trying to make money, trying to raise funding, that you want to limit the amount of time you spend on this data side. You don't even have the time. In fact, this is even the reason why a lot of entrepreneurs don't even take account, because I don't even have time to. I can't see myself, writing down what I spent. Like, come on. So we tend to despise this data area, but there are ways we could do. We could make it easier. Number one is eliminate cash as much as possible. Once you deal with a lot of cash, then you have to write it down, you have to document it. And guess what? The worst case, the area that, like the worst case is, and someone pays you money, gives you cash, and then you spend it immediately. There is no track record for that thing, and it's going to come bite you. So as much as possible, eliminate cash. Let cash go. If you have, any cash transaction, let cash go into a bank account, then withdraw it. Yes, it might seem like, oh, let's say, for what, I know most of our startups will definitely, not have that much cash transactions, but let's even assume, it's a normal, small business. As much as possible, let that, even if they pay you that cash, worst case scenario, take that money, put it in the bank, then withdraw. So there is all, these days there are people around us, all this, what do you call agency banking guys. You put the money, take note of it, record it. The bank itself becomes a report, a store of data. So I mean your bank statement. So that's one thing. Separate personal. This one is a lifesaver. Separate personal funds from business funds. So if you want to spend money for your business, transfer the money to the business account and spend from there, rather than from your account you send money to someone to pay for business expenses. Guess what? We have these issues a lot. When we come back several years down the line, you want to prepare your report, you have to go into your personal account and start digging into those transactions. It's always not fun. Capture transactions at source. For example, you have a payment link and then transactions going through. So that, these days, any platform you use, whether for POS, whether for payment, you have transaction reports. All of these are, capturing your data. If this thing is very simple, anytime you're making the transactions in the bank, write the description, right? So that if tomorrow you want to classify the accounts or classify those transactions, it's easy. Payment to SDC school, you can target training, right? So just make it easy. Just put the description there. When someone else or yourself want to do the accounting later on, it's easier. Of course, there's so many accounting these days. Just get one and use so many ones. Wave, Zero. Zero is quite expensive anyway. Zoho Books. There's so many of them. And then as much as possible, I think we now have that functionality. We didn't used to have that for a long time. I think we now have it. Connect your accountant to your bank account. And then get someone to help with your bookkeeping. Usually the way it starts is you do it yourself, then you outsource, then you hire. So you start by doing it yourself. When you have the money, you outsource it to a firm. It's still cheaper than hiring. And then when you have the money, you hire. So that's how, that's the 3-step process. Information, if you do all of these things, it makes it easier to capture, like the software. If you're using accounting software, automatically your balance sheet, your P&L and cash flow will be generated. Then all of this is just saying, okay, analysis and insight, either yourself or an accountant. Some softwares could help you do some analysis. And then, of course, planning and decision making, get your accountant, the management team, investors, and advisors. I think time is fast spent. Okay, so one last thing before we get into questions. Again, like I said, it's always more valuable questions. That's why I kind of skipped on a number of things. But feel free to ask me your questions. So let me share another screen. So here is, thankfully, most publicly traded businesses, their financials are available online. So here is the financials for Apple. This is in millions. So this 265, whatever, just is saying $265 billion. So this is 265,595 million. So let's just wrap it up to 265 billion. Okay, so let's see. So this is the information here. So insight is, okay, what can we get from this? What does this tell us? What story? Again, from the revenue, we can see that, from 215 in 2016 to 20, you can see that they're growing, they're doing well, so which is nice. Cost of sales is, so let's say Apple produces phones. We know they produce other things. So all the materials, everything that is directly related to producing that phone, the raw materials, the people working on the phone, the packaging, everything is what you call cost of sales. And so that's and then you have 84 million, 88. Again, these things, when we get into analysis, percentages help, so you can know what is the margin and so on. But here is, you can see something interesting here. Operating expenses, you could see research and development and selling, general admin. You could see from the way that Apple spends its money that a lot of its money is going to research and development. So the product guys, the software developers, their salaries they put them under research and development. So the people involved in general running of the business and sales and marketing, you can see that it's almost very close. So that's the main, that's where, the research and development is where Apple spends most of the money on. Then operating income, 70 million. Now let's just quickly, so that's at the end of the year, 70 billion, is like imagine that your company, some years down the line is making $70 billion. That's life-changing. And let me just move quickly to the asset. You can see that they have cash, marketable security. That means they invested in some some stocks. Account receivable talks about products they've sold that they've not collected the money. Inventories, the stock of products they have. Vendor non-trade receivables. I don't know what this non-trade receivables is, but anything receivables mean that people are owing you. So then other current asset, marketable. Now, one of the key things you will notice that Apple has a lot of money. The business generates so much cash that they have to put 170 billion into security, just buying stocks, just keeping it there. And they have property for 1 billion and so on. Look at their liabilities, right? So at the end of the day, the total current liabilities is 116 billion. The current asset is 131 billion. But let me even skip that. Let me just jump into their cash flow statement, and that tells us some stories. So cash generated from the operation. So this is telling us that out of that 200 and something billion, 20 something billion of sales, 77 billion cash came in. And here is how did they use that money? See, look at it. 71 billion is spent on purchase of marketable securities. Like they have just so much cash that they have to put 71 out of that 77 billion. Then these proceeds tell us that they sold some of their stocks and realized some of this amount, 55 billion, 47 billion. They bought some property for 13 billion and so on. Let me see. So then part of the money they had, they also repurchased their stocks. You know, when a company is repurchasing their stock, what it's saying is that they've made so much money, they have so much cash, and they could decide on, do we invest this cash in growing the business, or we buy back, you know, our stocks from our investors. So usually people frown at this, that, you know, you should be putting the money to grow the business rather than buying back. But these guys have so much cash. That's you know why they're doing that. So let's even go. Oh, okay. Sorry. One last thing before we go. Let's even go to Jumia. Let's see what does Jumia tell us. And you'll see an interesting story here. This is Jumia Technologies. You know, Jumia is also a publicly traded company. So this is telling us that they had, I think these figures are in thousands. So this is telling us their revenue in 2020, 159 million, then 177. So yeah, revenue is growing, you know, that's good. Cost of revenue is, you know, 51. So as at this point, things are not really looking bad, you know. After taking the cost of the cost of revenue will most likely be the product sales, you know, the products they are selling or they are reselling. But this is where you begin to see some trouble here. Fulfillment expense, 98 million. This is already telling you what is going on in this business. So we buy the cost of fulfilling, the cost of transporting these goods from our warehouse to the customer. Look at it. It's even more than the cost of the product itself. 98 million. Then on top of that, see how much they're spending on marketing, sales and marketing, 75 million. So 75 million divided by 2 to 1, they're spending 1/3 of their revenue on marketing. Whether it's working or not is another story. But just looking at this, you can already tell, is this a business I want to invest in or not? You decide. Then look at 55 million technology and content. Then look at this, 125 million for general admin. This includes salaries and just day-to-day running of the business. Is half of the revenue. That's not sustainable. But guess what? See, at the end of the year, they're incurring losses, 170 million loss in 2020, 240 million loss 2021, 226 million. Again, I don't care what business this does, but just seeing the numbers is already telling you what kind of company is this? What are the management team? What are they doing? If numbers are telling you. So I'm just going to pause there in terms of your numbers, your accounting really paints a picture beyond just some, okay, we made 1 million last year. It paints a picture. I'm going to close with this story. So we were doing recruitment recently, and you know, after this Q&A, we're doing recruitment recently, and someone applied, and it says he's working part-time somewhere. So I found out, okay, so what are you doing part-time? Okay, I work with this startup, and then he told me that they made 8 million in revenue last year. And I said, if the startup made 8 million in revenue, why is the startup unable to pay you a salary such that you're looking for a job or a part-time work? There's something wrong. Again, like I said, I don't know what they do on a day-to-day. I'm not there, but just that story, that is already a story. 8 million in revenue in the very first year of a business, and tech. It's not like they are setting up bakeries, or it's tech. It's just code, and then by the time we dug deeper into it, it was really revealing. And again, I can't tell like specific details, but a key few things that came out was that the founder, or the founder in charge of, well, one of the founders, is not a bit is not as prudent in terms of finances. So this guy is essentially just working out a plan B, that in case this guy runs this company down, let me go and look for a job. But guess what? I didn't know the story. I didn't know what's going on. But just the numbers told me something was wrong. And in digging deeper, I was able to find out. So you can say all the English you want. You can put AI 10 times in your pitch deck. But if you don't know how to manage finances, you're going to be in trouble. So let me just stop here and get your feedback or get questions. And, again, I thought I was going to finish quicker, but it looks like I still spent much more time. All right, guys. So questions, this is the part that I love the most, right? Questions, I'm happy to answer your questions now.
Thank you, David. Thank you so much. Thank you so much. So we have two opportunities, right? We have you can put your question in the chat box, um, and you can also raise your hands and unmute yourself to speak. But David, this has been very, very eye-opening. I'm sure these founders are now very well equipped that when it comes to building a business, the money part is important, and it's not as hard as many people take it to be. It's really looking at data. If you're a data analyst, if you love data, if you use data to make decisions for growth marketing, if you use data to make decisions for your customers, understanding who your customers are, then you should be able to use data to understand how the money works, like in your business. And you can already see the practical examples of companies that we are very familiar with, and how just by looking at the table you can you can just already tell. So if a company like Jumia is taking note of this, and you are in that situation very early on, you can know, okay, we're spending a lot of fulfillment, how can we reduce that cost, or how can we increase our revenue? Do we make more money from the customer, or do we cut down? Do we find a more efficient way to fulfill orders? How many people do we really need? I think those were the questions that people were asking, especially during the COVID period, right? And
Mm.
they saw that they could do so much with so little. So start thinking about it now. And if you have that mindset from the one, and you're constantly looking at your numbers every month, you cross checking it, leveraging tools as well. But even simple Excel sheets, if you can even get
Oh
it
yeah.
simple Excel sheets, it's really just about the tables. Where's the money coming in, and where's the money going out to? And at the end of everything, how much money are we spending on salaries? How much money are we spending on different areas? And then use that to make decisions. What you should do in your business. This is really, really practical stuff that you can start implementing from day one, right? So thank you. Natasha, I see a question. David, she's saying, I'm trying to
Okay.
figure
Okay.
out the best way to structure my team and finances. When is a
Okay.
good time to hire a
Hi,
CFO?
CFO. Okay, so thanks, Natasha. So it depends on what stage you are at. When you're starting out, definitely, it's DIY. You're doing the accounting yourself. And so CFOs bring like accounting, CFOs bring like senior level, high level, like financial management support, expertise. When you're starting out, you're doing the bookkeeping, accounting, DIY, and then you rely on people, advisors, your friend, someone who's an accountant or a finance person. So that's one. Then you get to the next level, you outsource the accounting side. And then you get to where you hire. Mostly what I see, people start by hiring an accountant, in fact, a bookkeeper, maybe someone that is, in fact, most likely it's someone who's already doing something in the office, maybe an admin person, then you add bookkeeping. Then it gets to you hire an accountant. So this is someone who can not just because some bookkeepers cannot prepare financial report, right, and file taxes and all of that. So you get to that level two of hiring, an accountant. Then you're able to, as you keep growing, hire a CFO. Again, remember that I'm responding to hire. Now, getting access to that CFO or high level finance support, you can always have access at every point in your business, depending on your network. You go to a workshop, you ask a question from an experienced finance person, so you have access to that CFO type knowledge. So don't be in a hurry to, if you are not yet there, don't because it's heavy commitment. In terms of the cost is significant. So yeah, I hope that answered your question. Then I think there's Ayomide also.
Yes.
Yeah, please go on, Ayomide.
Okay, so thank you very much. It's been an amazing session. Thank you. So I just want to ask, for an entrepreneur that has had to fund the business by himself, like all through the start until the company is now big, should such expect a refund when
I'm
investors
so
begin
glad.
to come in and all
Yeah,
that?
yeah. I'm really glad you asked this question. This is one area that I usually spend time talking about. When you're bootstrapped, and again, most of my ventures are bootstrapped. Every money, this is one area that I see that entrepreneurs shoot themselves in the leg. Any money you put in your business, first of all, it needs to be captured, right? So send it in. Now so we already talked about that, so you're transferring money from your account, right? This is loan or something. Don't pay even assets. So it's not just money. You could use your personal, so maybe you have a laptop and 100% of the time you're using for your laptop, you can transfer the laptop to the company. So essentially what you're saying is that I am Ayomiko, I am giving my business, I'm transferring this asset, this laptop. Market rate today is about, I bought it 100K, but today market rate is about 50K. So I'm transferring this 50K to the company. Third thing is expenses you incur on behalf of the business. Again, this doesn't involve cash. So a client says, oh, bring your products tomorrow. Let's meet at my store. Let me see it. Or, you're paying for internet for the business. So those are expenses for the business, but you are paying it personally. Also take note of them. Now, when you have all of this, so again, actual cash you're putting, including money from friends and family. I've had cases where, someone said, hey, my dad gave me 500K. So you have to decide, is that money to you, and then you are bringing it to the business, or is that money directly to the business? Many cases, it's just people are giving you money because they like you. So yeah, it's almost like it's you bringing the money into the business. So now that we've looked at these three cases, so what do? There are two ways you could classify this. One is put it as a loan to your company. So once you put it as a loan, it means that it's always showing. So it's showing loan. So anytime in the future, you can get your money back. So that's one. Number two is equity. So you could say, well, okay, I'm putting this in my company as part of my equity contributions. Equity is equity. Equity is risk, right? So the same way when you have an investor, if the business crashes, it crashes, right? So there is no commitment. The business has no commitment to pay you equity back, right? Because it's equities. If the business succeeds, you have, you get paid through what do you call this thing? You get paid through distributions, share, dividend. So for people who are looking to get their money back, strong suggestion is use loans, and always have documentation. Loan to write it when you're transferring the money, loan to the company, loan to this one, so that the money could pile up and tomorrow. That's how, for example, when I started traveling, the last thing that I wanted to add in terms of is also salaries that you are not taking. So the business, you must always have salary. We always hear that. The business should always pay you salary, right? But what I noticed from my experience, in reality, the business may not be at that point where you can take that cash out. So many of us founders are working without getting paid. But guess what? Put that down as a salary, right? So again, don't go and put, if the business is making 100K, don't go and put, because my worth is my worth. I don't know what it and then you go and put your salary is 100K based on, whatever. You put, let's say the business makes 100K a month, probably put salary of 25K, 30K. Yet it's below you, but that's what the business can do. Now, even if you do not take that money, let it go into the books. So guess what? When at the point I many times I wanted to travel abroad, It was and then the business now had money. I could now pull the money out because I've not been taking salaries for the past like 3, 4, 5 months. So by the time I needed money, it coincided with when some client paid some money. So I could say, hey, this is not me, robbing the company. This is me just taking the arrears of my 3 or 4 or 5 months of salaries I did not collect. So that's I hope that answers your question.
Oh wow, thank you, thank you. Maybe a question to that would be, how do these founders determine the amount of salary that they deserve? How should they go
Very
about it?
okay. Very frankly, it's subjective. There is no nice steps to determine salary. There's no so there various ways you can look at it. Is one is what is so you can look at minimum wage. That's one. That's like like minimum benchmark. Number two is you can look at what do you need to survive right now. Okay, I think I can survive on 50K. Now again, the scenario, what I tell people is this: if your business is still a baby and you say that business should carry block, even a newborn baby cannot carry a phone as small as tiny as a phone is. So you have to keep watching. Okay, where is my business right now? It's a baby right now, but a time will come. This, like us, a time will come. Where babies, a time will come, we'll be able to take care of our parents, even buy houses for them. But at the early stage, you just look. Okay, how much is the business making? If the business is making 50K a month, maybe you pay yourself 5K or 10K. Like there is no standard, right? But you just look at, okay, this is where we are right now. So those are the three areas, right? One is you can use, like when I say 5K or 10K, you can use a percentage and say, hey, at this early stage, maybe if the business is making 100K, maybe 5% or 10%, it's okay. Number two is use minimum wage as a benchmark. Okay, if minimum wage is 30K, then that's the minimum. Number three is you could use, don't use comparables. That would be, because if a company, you use comparables when the company is now in a place, in a good place. You have money. Okay, you say, okay, these people, this is the average salary for early stage for a fintech. So I'll use that. So those are the things that but if you're going to be, and then what's the third one? I can't remember. But yeah, you're just estimating at the end of the day. Okay, the third one I said is like, what do you need to survive? And don't put 50, to survive, to eat, to just basic lifestyle. Maybe 50K is okay for you, right? For me, for example, I said, like, it used to go up. I think the last I had was 100K with a family, like with a family. So because I looked at my expenses, I knew that rent was coming from somewhere else, and so from an investment. So okay, I think 100K is okay for me to survive. So again, each of us has a different situations. For some people, maybe you have to pay your rent from that money. So then you look at how much the business is earning and all of that. So I can't tell you. So long story short, it's not straightforward. Yeah.
Thank you, thank you. So one question before I take the last question, Ayomiko, right? So for founders who have, made the mistake of taking from their business, because you mentioned this other company 8 million, but they couldn't pay salaries the next year because of the way one of the founders was being very not very prudent with the fund, right? How so for a founder who has heard this now wants to return, wants to be restored, wants redemption, how what should be the list of steps they need to take to get on track?
Okay, so in this particular scenario, what came out is this particular they were co-founders, and I said, hey, what might be we may need to take this guy off the CEO role, like, or take him off the finance role because it's more of a habit. The person, gambles a bit. And gambling, it's difficult to change, right? So it's either let the guy just focus on technology because he's the tech guy, and then you be the CEO, or go find someone who will be the finance person. So if it's within a team, that's first, just getting that. Number two is, okay, if all of this had happened, Yeah, you can change the past. It's just going forward. You just need to focus on getting things right. Put yourself on a salary. Oftentimes when people don't put themselves on a salary, that's when these things happen, right? So you're not being paid. And again, sometimes it's value. You're not being paid for the past XY months, right? And then one investor money just shows up. The next thing the founder goes to buy a car. Sometimes these things, there is a side of it which is, come on, that's poor financial management, or I'm sorry, sometimes it's mismanagement. But on the other hand, there's also that sense of, come on, I've worked for 10 years, 5 years, 3 years. Can't I just, do you get? But so there's a balance in between that. That balance is, if there is a salary that is defined, but you hadn't taken, then you took it at some point where the cash was truly available, right? Of course, when I say truly, is that you also need to invest some, the cash, right? So that's fine. So main thing is that, of course, get your accounting in play, because if you did not see the numbers, if you did not realize, there's one person we did the accounting for, and we realized that, hey, this person had spent 10 million, they made 50 million in revenue. As this person had, aside salary, this person has spent 10 million on personal expenses. Guess what? The co-founder too said, okay, me too, give me 10 million. The business didn't survive long because their main source of revenue, got affected. It was a tech product, there were some decisions that were made. But guess what? All the money that they had made that would have piled up, that would have been like in reserve, which they will now be investing in next steps because of this decision that cuts back on their primary business. The money didn't exist anymore. But he didn't know that he had spent up to 10 million until we did the books and say, hey, come on, this is what it is. So that also helps. And of course, the final thing, which no one can do for anybody, is discipline. If that no one can do, no one can help with that. It's just being disciplined. Hey, this money is not my money, it's for the business. And how do I make sure that number one, I'm a steward? How do I make sure that I allow this business, this baby, to grow into a man, and that man can then take care of me? Don't try to force or compel the business to take care of you, when you're still the business is still a baby. So no one can help with those. You could also see it all over globally. You see some top businesses that have made some really terrible decisions, and it's just lack of discipline. So no knowledge. What I noticed with that one is just you decide you want to do it. No knowledge. Yeah, you can find out, the importance or not of financial management. But the guy who gambles, for example, he will leave this meeting and go and put the money in that place, in sporting bet or you get. So there's nothing until people then begin to get into trouble. That's when people wake up. That's the unfortunate thing, is when there's trouble, then people realize, oh my God, right? So you can choose to learn by being disciplined, or you can also choose to learn through a crisis. That's also fine, to be sincere with you. But one is more costly than the other.
Wow. Thanks so much. Then for the bit of recording, because you've mentioned a couple of times about if the business is owing. So on the account balance, or not the balance, sorry, the sheet, is there a place to write how much is being owed to the CEO? Where does that fall on that?
Oh, okay. So there's, depending on the type of business, there are different ways that people put it. So there is, there's a director's account. So that director's account, for example, usually on the asset or liability side, tracks. So asset is, if it's an asset, it means that you are owing the company. I don't want to get into the technicalities, but let me just call it the director's account is one. So especially even when you have multiple co-founders, let there be an account. Each person is tracking each person's money in and money out. That's one. Number two is this comes under the equity side of the account. You could have some call it shareholders equity, some call it shareholders contributions and drawings, or owners contributions and drawings. So any accounting software, if you check it, they always have that, or you create it, or you just have to ask an accountant. what that is. Or just simply, if you know that if you give much more to the business than you take out, just call it shareholders loan or director's loan, meaning that, and it will be a liability on the business. So the business is recognizing that, hey, I have these loans from from the owner of the business. Let me quickly speak to Ayomiko. So again, you could choose whichever way. You could choose whichever way you do it, to say, hey, do I want to put it as a loan with it be, with the goal of collecting it back, or do I want to put it as equity? Obviously, what you call investors always want to, they want to see that you have skin in the game and all of that. So that's one one thing that investors want to see, which is fine, but it doesn't negate, you could also do it that way. So if you're doing it as equity, it just stays in the book as part of your shareholders equity, so it's what you're bringing to the table, that you are not laying claim to. That's part of your own. You already have ownership in the company. So if the business is able to pay you, fine, to be true dividend. Some people use what they call deposit for shares, and that for example happens where, so let's say two founders start a company, both of them, okay, let's start a company with $10,000 each. So both of them put $10,000 into the business. They know they're going to raise money later in the future, but the $10,000 get exhausted, and then you need more money. So the question is, and both of them, let's say they have 50%. Then what they might do is, okay, let's create an account called deposit for shares, meaning that each of us, because one person may put another 1,000, another one may not put any money at all, but okay, let's just put this money, let's park it here, and in the near future, when we're now raising the next round of funding, this money then gets converted to shares, as though we invested in that round, right? So you're raising, X or Y amount, so it's almost like you invested in that round. So that's also that's something I've also seen.
All right. Thank you so much. Thank you so much. I'm definitely sure that everybody here has learned a lot right from this session, and I really want to encourage you to, wherever you have sort of fallen short, you can always come back. And then if you have not been very serious about putting the books in order, you have gotten a lesson here to actually put your books in order. I'll wrap up by asking everyone here to put in the comment section how you feel about today's class. Thank our facilitator for being here. Show appreciation. I'm gonna give you guys a minute to just drop that in the chat box. Say thank you, appreciate him. Also talk about what you've learned, what stood out for you. Right? Put it in the comments. Put it in the comments. I'm gonna give you a minute to do that. Okay, amazing and enlightening. Yes, I am Nicole. If you guys have been here, just put in the chat box how it has been for you. Learned a lot today, was new knowledge from wow, that's fantastic. That's fantastic. Keep putting, just show appreciation. It's not easy for him to take out time. He's a very busy man. He's a father, he's a husband, and there's also time difference. He's not in Nigeria, and he's having to do this with such a very huge time difference away. So show appreciation by saying thank you. And thank you so much, David, for doing this. I truly appreciate you taking out time to teach these founders the amazing things you've taught them. Their lives are definitely changed. I know that a few years from now, they'll still reflect on this session that you had with them. And so I want to encourage you all to follow Venture Hub Africa. They have got amazing resources for founders. I've also had the opportunity of supporting the work they do. David, do you want to say anything about Venture Hub Africa for the founders here?
Yeah, thank you so much, Cynthia, and thank you everyone for the appreciation. Yeah, really grateful for that. So, yeah, Venture of Africa, as I said earlier, focuses. We do, many of the things that SDC also do. Obviously, there's so much that needs to be done. So we need more of us. who are supporting entrepreneurs. One area that, like I said earlier, so connecting entrepreneurs with resources, knowledge, funding, services, and so on. Definitely one. Two is we're also creating like knowledge products, that just help the ecosystem. So we created, for example, maybe I could send that a funding readiness toolkit. I'll share it with the SDC team so they can share with you. So that's just for people to know what they need to know. So even if you forgot what you learned in this session, that doesn't really cover accounting and financial management. It's just more of prepare your business for funding. I think final thing is just to challenge every one of us, and that's where we are now. Africa has so much problems that we can no longer focus on doing business to make profit alone. And I want you guys to just check through the successful businesses in Nigeria. Top growing businesses in Nigeria, always banks, and then a couple of names. And I'm not calling any name in terms of banks. But the question is, when you look at the books, when you look at their numbers, there is so much more they can do to help. But you're just piling up, everybody just, let me get what I can get. We're just piling up all this money, piling up. And at the end of the day, we're not all benefiting. Yeah, we're just benefiting a fraction. So that's where we are now, where we're getting into how do we get entrepreneurship to facilitate economic development where people benefit, irrespective of whether they're entrepreneurs or not. We all need good roads. We all need good schools. We need all this stuff. And so that's where we are really, we're trying to educate entrepreneurs and find out models and funding and resources for doing that. So yeah, thank you so much, Cynthia, and thank you everyone for being here.
Awesome. So I'll just wrap up by letting you guys know of the SDC Startup School. What you're experiencing now is not SDC Startup School, is the SDC workshop, and it's just a series of workshops that happens between each SDC Startup School session. So the session for SDC Startup School happens twice a year. We have one in April and another one in September, right? So it's an opportunity for you to come in, learn the basics. If you're getting into this thing for the first time, you are aspiring to be a founder, this is one school you want to participate in. Is it's a packed class. All right. So I wish everybody the best, and thank you again, David, for doing this. Wish everybody the best. I want to encourage you, keep doing what you're doing, keep building, but make sure that you do it in an educated way. All right then, everyone.
All right. Thank you. And bye, everyone.
Bye.
All right, thank you, Cynthia.
You're welcome. For Ayomiku, don't worry, you get an email during the onboarding period. So now it's just for registration. So we're going through the people who are registered and just making sure that I will review the application. So once it's time, you get an email if you were able to make it to the next day. All right then, take care everyone. Cheers.